It's Wednesday, July 13th, 2022. A lot to talk about today. I want to get right into it. Before I do, please take a second. Make sure to give this video a thumbs up. Make sure to share this video with everyone you know, you don't know, and make sure you subscribe to this channel. Hit that bell notification button down below so that you are alerted with the newest videos. But without further ado, let's get into what's happening. Inflation rose 9.1% in June, even more than expected as consumer pressures intensify. This on CNBC this morning. I was shocked that the markets did not collapse today. Markets across the board did close down, but you have to ask yourself, with the incredibly bad news that we got today with inflation, more layoffs, just everything that we're getting is just bad news for this economy. The direction that this country is going in, bad news. Prices increasing, bad news. We're going to, I think, get the PPI numbers tomorrow. It's probably going to be more bad news. And yet, Dow Jones was down 208 points today, I believe, a little over 200 points. It's really literally a miracle that we did not see these markets absolutely get destroyed today on the news that we continue to receive, and especially with inflation rising to 9.1%. And as I'm watching some of these television shows today on the economy, listening to some of these economists, some of these guests that were on some of these shows, they act surprised that things are so bad. They're literally surprised. One woman today said, well, everyone out there is working. We have 11 million job openings, jobs everywhere. People are working. People are going to just keep listening to all this negativity and begin to believe that we're actually in a recession. And then they're going to stop spending as much money. They're going to talk themselves into a recession, she said. I just cannot believe what these people say, and they get paid to say it. But people are not spending money now because they're tapped out. And I don't think that this woman, this economist, analyst, guest, whatever she was, I don't think she understands that. And how many of these people on the television actually go to the gas station, pump their own gas? How many of these people actually go to the grocery store and actually shop and pay their grocery bills? Many of these people live in ivory towers. Many of these people do not pump their own gas or go and buy their own groceries. And they're completely out of touch with what is happening to the average person in the U.S. economy. The average person who is working hard, working 2, 3, 4 jobs and falling behind. These people do not get it. And it just almost infuriates me watching this and just seeing how out of touch these people really are. Let's go over a little more data today. Mortgage applications down 4% from a week ago, while inventory is up nearly 19%. Chicken prices. Chicken is up 18.6% this past June compared to last June. Eggs are up 33% this past June compared to last June. A friend of mine today was telling me that he now has family and friends coming to him asking him to lend them money, lend them cash. We talked about this over a year ago, maybe 2 years ago. I'm sure some of you will remember this, and I talked about it recently. As times get worse, as this economy gets worse, as things get worse socially, as we continue to watch more and more layoffs, and we're going to see layoffs into the millions, people are going to come knocking on your door. People you know, people you're related to, people you might live next to. People are coming to your door. They're going to ask you for food. They're going to ask you for money. They're going to ask you to protect them. They're going to ask you for help. And I said this many, many times. Be prepared to deal with these people that come knocking at your door? Are you going to let them in? Are you equipped to help them? Are you equipped to tell them no? And what if they don't leave when you say no? Are you equipped to deal with those kind of people? You know, when they say we're not leaving, we're coming in your house, we're going to take what you have because my kids are hungry. What are you going to do? And this is why we talk daily about why you better have a plan, you better have security, because people, when they get desperate, they're coming to you for help. And if you don't help, some people are coming in through your doors and they're going to take what you have. And you better be prepared to deal with that. But I thought that was interesting that people already now are running, they're desperate. They've run out of options. They're out of cash. The savings has been drained. The credit cards are tapped out. The car's been repoed. Now what? This is going to get very ugly, very, very ugly. And I'm very, very concerned about it. And every one of you watching this video today should be concerned about where all this is going. This is going to be the worst financial collapse the United States of America and the world has ever seen. Bond slump as inflation surge fuels bets on 100 basis point Fed rate hike. This on Yahoo Finance today. I was pretty sure it was going to be 75 basis points. I believe it's going to be July 27th we get that rate hike. They are now saying that there is a nearly 50% chance we're going to get a 100 basis point rate hike this July. What do you think? Comment down below. Will it be 75 or now will it be 100? Personally speaking, I do not know why this Fed is waiting and doing these small incremental rate hikes. We should be raising rates at 1 full percentage point at every Fed meeting all the way to the end of the year. The Fed, again, so behind. And when we see the damage that's being done with the Fed really doing nothing, doing the bare minimum, which is only hurting the economy, it's not doing anything to slow down inflation. And this is what happens when you print $5 or $6 trillion in a 2-year span. This is what happens. See, people thought the gravy train was never going to end. It was all about the free money, the stimmies, the benefits, staying at home, not producing, not manufacturing, maybe not having to pay your rent, not pay your mortgage. And this was $5 to $6 trillion of printed money. Well, this is now the hangover that people got. There is no such thing as a free lunch, ladies and gentlemen, as you all know. And now the hangover has arrived, and it's going to get very, very gnarly out there. But I don't know. This Fed has been such a disappointment. And this Fed better stop worrying about the stock market, and it better start worrying about the U.S. people. It better start worrying about the economy. It better start worrying about the world reserve currency we call the U.S. dollar. And it better do something here very, very quickly. In all honesty, I don't know why the Fed just doesn't come out tomorrow and raise rates. Why are we waiting till the 27th? This is, we have a crisis, ladies and gentlemen. And this Fed is too concerned about the housing market. It's too concerned about the stock market, and it better get concerned about the future of this country and this economy. And if it does not stomp out this inflation crisis that we have right now, if it doesn't do something really, really soon, it's going to have to get now it's going to have to get even more aggressive than it should have been a few months ago. Now it has to get even more aggressive. They're going to come to a point where they're going to have to start raising rates 1.5 points to get this under control. So we're at 9.1% today. I believe the PPI comes out tomorrow. What is that? Is it going to be higher, lower, the same as last month? I don't know. And this 9.1% that we got today, think about how manipulated this number is. You all know that inflation is probably near 20%. Many of you would say it's over 20%. I wouldn't argue with you. Let's just say it's around 20% plus. Think about, again, what you're not being told, what we're not seeing behind the scenes. We have a very, very weak banking system. Look at what's happening in the repo market right now. Liquidity is going to be an issue. And most people just go on with their daily lives, just believing that this is going to go away, that it's not going to last very long. And they are completely wrong. Average American worker has lost $3,400 in annual wages under this administration, thanks to inflation. I would say that inflation being around 20%, that they've lost more than $3,400. I would double that. I would say that the average workers probably lost closer to $7,000 due to this inflation crisis. Home loan size retreats from record as mortgage application demand cools. Another sign of the times, ladies and gentlemen. According to the Mortgage Bankers Association, the average purchase price of a loan, the average purchase loan size fell to $415,000 for the week ending July 8th, down from $460,000 in March. Mortgage apps fell 4% compared to the previous week, and purchase applications fell 14% compared to last week. They're down 18% from a year ago. You think it's a good time to buy a house? I don't. I think this would be the worst possible time to buy a home. Home sale cancellations hit highest rate since the start of the health crisis. 60,000 homes fell out of contract in the month of June. Think about that number, 60,000. 60,000 homes fell out of contract in the month of June. That's nearly 15%. New job openings drop in 47 states, nationally down 17%. Do you really believe, let me ask you this, I don't know the answer to it, comment down below. Do we really have 11.3 million job openings? Now, I'm sure that there are a lot of jobs available out there. I see the hiring signs, but I also know that a majority of these jobs are low paying, low wage, part-time, service sector type jobs. But are there really 11 plus million jobs available out there, or are these numbers also being manipulated? Because we keep seeing, 250,000 jobs every week, literally, of people filing jobless claims. And so that's 1 million job losses roughly per month. So how many jobs are really out there? And when you look at job openings dropping in 47 states, nationally down 17%, what does that mean for the economy? And how do you support a housing market when you have all these service sector jobs, all these part-time jobs, all these low-wage jobs, and when you have 47 states that are dropping in new job openings, down 17%? How do you support a housing market in this? How in the world can the stock market not have collapsed today on just the news I'm talking about today? Just on the news of what's happening in the housing market, mortgage apps, purchase apps down, consumer sentiment destroyed. It's incredible. If we look at job openings, just some of the states in this article, job openings in Oklahoma down 25%. In Louisiana, job openings are down 20%. Mississippi, they're down 21%. Alabama, job openings are down 18%. Florida, they're down 21%. Pennsylvania, they're down 31%. Delaware, they're down 40%. And here's a newsflash for everybody out there. We are going to see massive layoffs throughout the United States of America. So if you have a job right now, do the best job that you can to keep that job. U.S. consumer prices soared in June. Americans' real wages fall for 15th straight month. How long are people going to be able to hang on? There are people out there that are hustling. They're working 2, 3, 4 jobs. They've moved in roommates. They're doing everything they possibly can. And they're having a very difficult time getting through this. I spoke to a buddy of mine today. And he went to my buddy Alan out in Florida, really good friend of mine. And we speak a couple times a week. And he told me just the other day, he's very, very concerned with what is happening. And he has some money in some banks, multiple banks. And he's not happy, not feeling too comfortable with the status of banks, and he's been pulling money out. He's done the right thing. He's definitely bought a nice amount of gold. He's put cash away. But he said he went in the other day to get more cash out of the bank, and they wanted to know why he needed this cash. And what people, if you haven't gone to a bank and tried to pull out $4,000 or $5,000, $7,000, you might be surprised that your bank may not give you the money because they don't have the cash there. Now, he got his cash, but they wanted to know what it was for. And I just think that that's interesting for a bank to want to know what you're going to use your money for. And also, I've had many people write me, and I've gone through the same experience. Go to a bank, try to cash a check for $4,000, $5,000, $6,000, $7,000, and many banks just will not and cannot do it. They will say that they have to order the cash. You'll have to come back in 2 days, 3 days, 4 days, whatever it might be. But that to me is a concern when a bank doesn't have $4,000 or $5,000 on hand to give it to you, and then if they do, they want to know what you need this money for. What are you going to spend it on? That's concerning, and that's why I'm doing the best that I can to get out of the system the most that I can. And my advice, and I don't give financial advice, but the advice I give my friends and the way I live is keep just enough in the bank to pay your bills. Unfortunately, your money today is probably safer under a mattress, whether that's $100,000, $200,000, $300,000, $400,000. Remember, everybody goes, well, it's FDIC insured. Well, FDIC only has so much money. The FDIC does not have enough money to insure all of depositors' money. They cannot insure every bank account, every deposit in the United States of America, not even close. So if we got into a massive collapse and we started seeing bank runs, that money that the FDIC has would run out very, very quickly. They could not even cover a quarter of, not even near a quarter of the money deposited in the banks here in the U.S. The FDIC is not even close. They have billions of dollars in reserves to cover $20+ trillion in depositor money. Whatever, I don't know. I don't have the latest numbers, but not even close. Not even close. So how safe is your money? Is it safer in one of your private vaults? Is it safer under your mattress? I don't trust banks, ladies and gentlemen. You know that. So do what you want. You can keep all your money in the bank, but I just think it's a really risky thing right now to be trusting banks. Your money is safer with you outside of a bank. That's my opinion. But as we move further into this massive recession that these people on television still cannot admit, they can't even believe what's happening right now, and they just think people are talking themselves into a recession. We have been in a recession. These people just don't get it, and you need to be preparing for the long haul. And I'm going to close with this last article today. I thought it was pretty interesting, and I read this a few days ago. It was on USA Today. Want to live in a safe neighborhood? Find one with lots of dogs. Study suggests. If you have the means, if you can take care of a dog, get yourself a dog. You know I'm an animal person. The animal rescues, I'm sure, really need help right now. I know a lot of people who are, have met a financial dead end, have had to turn in their animals, and that's a really hard thing to do, a really sad thing to do. But if you have the means, get yourself a dog. I think it's therapeutic. I think that they're turned into family members. And a dog is a great alarm system. It doesn't even have to be a big dog. Even a little dog, a little Chihuahua is a great alarm system. If you really have the means, invest in a good KMPV police dog. There's some good facilities, a couple good ones out here in Southern California. They're expensive, but they are not just an alarm system. I mean, they are really, you talk about adding security to your property and to your family. You get a KMPV Malinois or German Shepherd or Dutch Shepherd. That is really adding security to your home. Really a great asset. But Not everybody has, $12 or $15,000 for a dog. I understand that, but you can get a nice dog at a pound. You can get a big dog at a pound. You can get a medium size, a small dog. They're all going to bark. They're all going to alert. And those big dogs are very intimidating too, even though they're not trained and they're not, KNBV police dogs. A big dog is intimidating, and a bad guy is going to go to the next house or the next neighborhood. So if you have the means, it's a great time maybe to rescue an animal, bring one of these animals home to be a family member. Dogs are incredible, even cats. I love cats too. I love all animals, but just talking about security, a dog is an incredible asset. Even a little dog, it's a great little alarm system. Their sense, their smell, their hearing, they will alert you, and it might be time to think about doing something like that. So some people aren't dog lovers. I get it. But if you are and you have the means, it might be a great addition to your security. It might be a great addition to your family. I think you can never go wrong by having a dog. Absolutely phenomenal. And you'd be saving a life and doing a great thing. So I'm going to leave it there today. God bless all of you. Thanks for watching. We'll see what happens tomorrow. More magic tricks in these markets. It's amazing how they can save these markets. It's how much more bad news can these markets take before they collapse? Will we wake up one day and the whole thing just comes crumbling down, or is it going to continue in slow motion? I don't know. I do believe that things are accelerating, and I do believe we're going to wake up one day and we're going to go, wow, this is incredible. I can't believe what just happened. But you will believe what just happened, because you've been preparing for it. Your friends, though, they're not prepared. They're going to be in shock and awe when this thing comes down. You will understand why it came down, and you will know what to do, and you will prosper. God bless you all. Have a wonderful, wonderful day and a wonderful week. I look forward to speaking with all of you very, very soon.